Hello everyone, I'm Philip Gervais from Hampden Hills Tax and Financial Service, and I'm glad that you are joining us today on our fourth video in the PPP series, which is how much can I get a PPP loan for? So our first video was what was a PPP loan. We've done videos on how to calculate amounts. We're doing videos on how to fill out the forgiveness application. So there's several videos in these series to go back and really understand what these PPP loans are for, how they work, do they apply to my organization, should I really get them? So today let's go over how much can I get the PPP loan for. So the PPP stands for the Paycheck Protection Program. So the short answer is you can get a maximum of 2.5 times your average monthly payroll cost, up to $10 million, whichever one's lower. So I say that's the short answer because, of course, dealing anything with the government, there's going to be exceptions to the rules. There's going to be little caveats to stick in there. So let's go over those today and just see a little bit about what's going on. So first, in general, it's when your business was open. So if you were open prior to 2019, then basically what you'll do is you're going to use your 2019 tax information. That's going to give you your average cost information, which we'll go over the calculation of that in just a minute. If you were in business from January 1st, 2019 through June 30th, 2019, then you can use one of two options. You're going to either use the last 12 months of payroll data, or you can use your 2019 tax information. Now, for those of you who got in business after June 30th, 2019, you again have some options. You can pick the option of either using your 2019 information, or you can take January 1st through February 29th of 2020 payroll cost information, and then divide by 2, and you can use that as your figure. So there's a couple of different options you can use to come up with the PPP loan, and we will go more in depth in it, but let's talk a little bit about the exceptions that are happening. So before I go into these exceptions and just anything else, let's give an important disclaimer here. So PPP loans are governed by the SBA, which is the Small Business Administration. It's a United States federal agency. And whenever you deal with the federal government, whenever you deal with federal laws, they are subject to change. So we've already seen the PPP laws and the advances that for disaster relief, we've already seen them change. As things have gone on, they've changed guidance, they've changed direction. So anything dealing with the government is subject to change. So please keep that in mind as you watch this video, because you might be watching this video a little bit further in, and the laws may have already changed in reference to that. So the second thing is the amount that you get your PPP loan for is not necessarily the amount that's going to be forgiven. So most people think, I'm going to get the whole loan, the whole thing's going to be forgiven. The idea behind it is that it will all be forgiven, but it's not necessarily the case. Because what I've seen in so many people who have gotten PPP loans is you'll fill out the application, and it was true for my businesses as well. The amount that I put for the loan is not the amount that I got. I actually got a higher amount. So even on the SBA's website, they have a calculator on there. I figured out the amount that I would give in a dummy reference point. I just came up with fake figures. I figured out on a calculator what the loan would be. The SBA loan calculator gave me a loan for a higher amount. And I'm just going to round. It's not the exact amount. It was $52,000. But when I went through all the calculations, now I did not include interest on mortgage and rent and utilities and things like that. But only $41,000 of that was going to be forgiven. So do keep that in mind as you go through. Make sure you watch all the videos, because I do go in how much can be forgiven of that loan. It's important to understand so that you're not having a loan if you're not expecting to get a loan. So for self-employed people, how you're going to calculate it is off your Schedule C information. Again, I went into, it depends on when you started business just a little bit ago. But for your payroll costs, that's going to come off of your profit in the business. So you have your gross revenue, your gross profit that comes in. You will take off your expenses. What's left is your net profit. That is the figure that is being used for your payroll. That is what you're living off of. That's what your families are living off of. That's the figure you're going to use. So basically, if you just look at your Schedule C, the bottom line of that figure, of what your net profit is, you take that, divide it by 12, that's going to give you your average monthly payroll. So for companies who have employees, you're basically going to look at your W-3, which is your summary of all your W-2s, and you're going to take box 1, you're going to divide it by 12 to get your average monthly payroll. And if you're a Schedule C, a self-employed type individual who also has employees, you have two calculations. Excuse me. You have two calculations. One, you'll use your W-3 box 1 divided by 12, and the other, you're going to use your Schedule C, net profit, divided by 12. You're going to add those two together to get your average monthly payroll. So that's the basics of how you kind of come up with the amount. But now, of course, we're dealing with the government. Let's go over exceptions to the rule. So, exceptions to the rule, the cap per person is going to be $100,000 of how much they can make in a year. If they make more than that, then that amount cannot be subject for the PPP loan. So you have to reduce figures when it comes into that. So basically when it comes in, you're going to have your W-2s. You have to do an assessment. First, we'll just start with employees. Do any of my employees make more than $100,000? If they do, we need to track, okay, employee A, employee B, and employee F make more than $100,000. We'll have to reduce their salary to $100,000 in our calculation here, and then put those back to the total and divide by 12 to come up with how much we can get a PPP loan for. So the other thing is you'll have to ask is, and I'm going to read some of these questions. So do you have any employees whose principal place of residence is outside the United States? If so, they do not qualify for a PPP loan. You'll have to remove those. So you'll take your W-3 box 1, and you're going to remove the cost of any employees whose principal place of residence is outside the United States. You're going to subtract that from the figure. The second one is, are you self-employed with no employees, and your principal place of residence is outside the United States? You do not qualify at all for a PPP loan. So this will not work for you. You cannot get it. And of course, do you have any employees who make more than $100,000? So you're going to identify those employees. So in our example, we had those 3 employees. So basically what you'll do is you'll take your W-3 box 1. You're going to subtract the entire amount of those 3 employees from your W-3 box 1. And then basically you'll go in and just add in $100,000 for each of the employees that make more. So in this case, we have 3 employees. The remaining figure, you're just going to add $300,000 to that figure to come up with your aggregate total for the year. That's what you'll divide by 12 to get your average monthly payroll. All right. And then, are you self-employed and your net profit is more than $100,000? Again, you're going to have to reduce it back to $100,000 for the example. You cannot use more than $100,000. So, in figuring the $100,000, we have to take a few things into consideration. Now, what was really happening is we were seeing people, they were going for loans, and institutions, of course, you have to get it through a bank, you have to get it through a credit union, and credit unions started putting all these demands, not credit unions, but banks, credit unions, all the lending institutions, not all of them, but there was several of them that were doing it, were putting all these demands on employers trying to reduce the amount that they could legally get from their PPP loan, and finally the SBA had to put additional guidance out on April the 6th, 2020. They put additional guidance out and said, listen guys, you're not gonna do this. This is not what this means. So it only applies to cash compensation when you're dealing with the $100,000. So this does not include what the employer pays for benefits, and that's what several institutions were doing. They would be grossing up. So let's say you make, your your W-2 comes in for an employee and they have $100,000 exactly, so they qualify and there's no reductions, but the employer pays health insurance for them. The employer pays their matching part of Social Security and Medicare, and they pay unemployment taxes, which cover the employee. All these things are being added into wages to try to reduce numbers down, and the SBA said no, that's not how that works. Anything the employer pays on behalf of the employee are not considered income if they're benefits. So all the taxes that they're paying, the employer matches of Social Security and Medicare, unemployment taxes for state and local governments, these are paid by the employer. They're not considered part of cash compensation to the employee when figuring the $100,000. So there are 3 exceptions that they put in there. Employer, and bear in mind that word employer, contributions to defined benefit or defined contribution plans. That's like a 401k or 403b. So the amounts the employer are putting in are not going to be considered cash contributions for the $100,000 rule. Payment for the provision of employee benefits consisting of group health care coverage, including health insurance premiums. Again, what your employer pays on your behalf is not going to be considered income for the PPP loan. And then payment of state and local taxes assessed on compensation of employees. Now originally, there's not a lot of additional guidance to go into these. And several people are saying they mean certain things. But the thing about the law is when you read laws, you have to read the context of the law. What are we talking about when we are looking at it here? And what we're talking about is the amounts that employers are paying on behalf of employees. So even though you're going to go online and you're going to read that certain things do not qualify here, anything that's on box 1 of an employee's W-2 is going to be considered cash contributions to the employee. So the employee themselves, if they're paying health insurance of $20,000, so they make $120,000, they're paying $20,000 of health insurance. You're like, oh, well, they don't make more than $100,000 because health insurance is not included. That's employee paid, not employer paid. So the critical thing to come up with here is what the employer pays is not going to be considered cash contributions. What the employee pays is. So therefore, you cannot reduce, think that this employee is fully covered because health insurance is coming out of his check there. You have to use the full wages, $120,000. You're going to have to reduce that employee's wages by $20,000 in that example to come up with $100,000. So there's several guidance online that says you don't have to do that because of this clause. That is not what that clause means. So also the payment of state and local taxes is another one. There's not a lot of guidance on there, but again, you have to look at what are we talking about here. And what we're talking about here are their taxes that employers pay to the state and to local governments on behalf of the employees. They're not paid by the employees. They're not going to be considered portions of compensation. So for the $100,000 cap per employee, but anything on an employee's W-2 box 1, which are going to be totaled on the W-3 box 1, are going to be considered cash contributions. So payroll cost. So, and this is how you know what I said is going to be accurate. So this is directly from the SBA's website. So payroll costs consist of compensation to employees whose principal place of residence is the United States in the forms of salaries, wages, commissions, or similar compensation, cash tips, or the equivalent, based on the employer records of past tips, and in the absence of such records, a reasonable good faith employer estimate of such tips, payment for vacation, family, medical, sick leave, allowance for separation or dismissal, payment for the provision of employee benefits consisting of group health coverage, including insurance premiums and retirement, payment of state and local taxes assessed on compensation of employees, for independent contractors, sole proprietors, wages, commissions, incomes, and net earnings from self-employment. So basically here, it is important to understand that when you're reading online, that you get to subtract from box 1, employee makes $120,000, $20,000 is for health insurance, I can leave the full $120,000. That is not accurate. It's very clear when you read the SBA, if you read the entire thing, not just taking little segments out. The law is an entire thing. You cannot segment it to try to pull things out without understanding the entire package here. You have to reduce that employee's wages by $20,000 to get your accurate PPP loan amount for the calculation. There is a special note here. Now, I said the government likes to change things, and they also like to do things without telling people. So there were two things that were happening. So the government said that you can get, and originally I think this was the intent. So when the president said this is what I want to do, this was the intent, but then Congress went and changed it afterwards in additional rules because they wanted, the president said, hey, we need more money to go into this PPP program. And this is not a political statement here, this is just simply what happened. So part of the changes are going to be this. You could get an advance loan, or it wasn't a loan, it was an advance grant from the SBA of up to $10,000. And originally it was just a $10,000 grant you could get. Then it was changed to $1,000 per employee up to a maximum of $10,000. And that was just a separate grant that you got to keep. Then you could get this PPP loan. When it comes to forgiveness of your PPP loan, you have to factor in your SBA grant because that's going to be considered as part of it. So if you get a $50,000 loan, you're like, no problem, I can cover all this $50,000 loan with my wages. And even if there's a reduction in certain wages with the rent and utilities, all this will be good. You also have to include how much did I get a grant for. So if I got a $6,000 grant, you still might end up having a taxable, or not a taxable, but a loan conversion that's going to happen in that example. So please make sure you're aware that that is something that is going to happen. And when I say the government doesn't always like to tell you things, I didn't mean it exactly how it sounded. Just sometimes what happens is, especially in an emergency, the government's trying to put things out to help people. But when they're putting things out to help people, they don't cover all the bases because they're trying to push it out there so fast. And legally, there's so many things, so many steps that have to happen in the legal process, things will get missed. And that's really what I meant when I said the government doesn't always like to tell people. They do like to tell people, it just didn't come out right. They don't always tell people because of everything that has to happen. And I just think people being in general, until people start asking questions, sometimes you just don't think about them, and they're like, oh, now let's put out some additional guidance because I didn't think that people would be questioning in this area. So that's really what I meant by that. So there are 2 more videos that come after this, and please stay tuned, watch those videos, and especially the last one. There is a loan forgiveness application that I'm going to be going over how to do that step by step, so to make that process easier. And thank you guys for watching, and I hope you have a great day.